But the big exclusive on NDTV Profit right now, India may liberalize Forex rules on equity investment. Very, very important messaging for foreign investors and foreign flows coming in. Shrimi joining with all the details.
Yeah, so government is considering, a clutch of changes to its Forex rules, which is FEMA, to attract more foreign investment is what government officials tells NDTV Profit. So how they're going to do it is what we are given to understand, that they're looking at easing the rules for non-debt instruments like equity, mutual funds, real estate, etc., which could potentially make it easier for foreign investors to invest in these sectors. So what they are considering at this point of time is to reclassify foreign direct investment to foreign portfolio investment. Now, remember, FDIs are mostly into the unlisted space. So when it gets listed, for instance, how will they get a treatment, reclassification to be foreign portfolio investment is what they are working at this point of time. And MOVE is seen as a kind of step to make investment opportunities more flexible and attractive to all these FDIs and be on par with FPIs is what government officials telling us. So remember, in November, the government already allowed FPIs to convert their investment to FDIs after they acquiring or exceeding 10% stake in a company. So, furthering that move, they are also looking at the FDI to make it possible for if they are shifting to FPIs. Apart from that, the sources tells us that this move is a part of ongoing exercise to make foreign Forex rule to be better aligned with the current economic situation. And for that, Finance Ministry and other financial regulators are in talks to bring a proper legislative changes to the FEMA rules with a timeline of about 6 months. And this will help definitely to further streamline the procedure and all, processes and compliance for foreign investment, better. So in a nutshell, these potential changes could simplify the process and offer greater flexibility for foreign investors in the coming month. And this is a kind of push to ease FEMA regulation to show a clear intent to boost foreign capital inflows in the country.
Okay, so no, Shrimi, I just want to contextualize this because yesterday you had the first FPI buy figure for equity markets in 23 trading sessions. There is also a whole context of how global funds have been exiting India, and not because of domestic concerns, but because of what's happening globally. Should we be seeing this in the context of India trying to make even equity and investments in India more attractive to global investors?
Yeah, definitely. So what the restrictions between the FPIs and FDI, that FPI is definitely for the equity markets and coming through the SEBI, there has to be SEBI registration for FPIs to enter the markets, capital markets. For FDIs, they are mostly into unlisted space. They come through all those, restrictions are there for FDIs and a sectoral-wise restriction that how many percentage can you take in the Indian company. Now, what they're thinking and the suggestion they're working on that how sort of FDIs who are, are in listed space. And for example, that unlisted companies is wish to list in the stock market. So instead of exiting that unlisted company, whether they can continue it as a FPI, which is currently as FDI. So that thought process is there, and definitely if you make the transition smooth and make the alteration and flexibility to foreign investor, of course they will come more and try to sort of explore equity market. That's the intent.
Okay, thank you for that, Shrimi. A big move over there, and I think those signals become crucial, Hiral, considering, and having said that, even for the last 6 months, you've seen Nifty in that volatile range. Even with FPI outflows, the inflows from domestic investors have been fine. But if you do have a reversal of trend over here, it becomes very important. Like we said, we're not counting one day's figure as a trend over there.
You mentioned about the DIIs as well, the ownership that they have in the market, the gap between the DIIs, the domestic investors and the foreign investors absolutely has been very narrow. In fact, at the end of December, the DII share was almost 17% versus FPIs, which were at 17.2, right? So yes, the importance of FIs is there. But whatever support we've got so far has come in from the DIIs. So the trend reversal that you're talking about, an absolute positive, because that's what will help the markets scale new highs there.